This is Total Growth Investing, where price growth is not enough. Dividend growth is not enough. We want to identify stocks, funds, and other investments that perform well in both of these measurements, because when we find them and buy them, we can beat the market over the long term. Right now, the number 3 stock on my ranking list is MVB Financial, which is the holding company of MVB Bank. The sector is financials, obviously, and the industry is regional bank. MVB Bank is based in Fairmont, West Virginia. This is a very small cap company compared to many of the others on the top of the TGI list. Let's dig in and try to figure out what brought them to the top and where they might be going. First, I need to put this disclaimer out. As I have said and put into text in my videos before, I am not a financial advisor. I am posting this video for entertainment and education purposes, and the opinions expressed are my own. I do have a long position in MVBF, but I am not monetized on this channel in any way, shape, or form, and I have no business relationship with any of the companies mentioned. The Monongahela Valley is formed by the Monongahela River, which forms as a conjunction of the Tygart Valley River and the West Fork River at Fairmont, West Virginia, where the bank was incorporated. The Unami word Monongahela means falling banks, a reference to the geological instability of the river's banks. This was not the first Monongahela Valley Bank in the West Virginia and Pennsylvania area. There was a bank that existed in the 1800s and actually issued currency, printed by the American Banknote Company. This bank became insolvent and was the subject of a lawsuit in 1913, Commonwealth versus Monongahela Valley Bank. And while rabbit holes like this can be fun, let's get back to the bank that we see today. The current incarnation of the Monongahela Valley Bank was formed on October 30th, 1997. MVB Financial was formed in June of 2003 as a public holding company, and the bank was brought in as a subsidiary on January 1st, 2004, and went on to the over-the-counter markets. MVB is a community, commercial, and retail bank, and I liked the focus in the annual reports that they put into carefully watching the population and employment data for the counties where they do business. During the year MVB opened in 1997, West Virginia hit their highest total coal production, 181.9 million tons. That was 25 years ago. The data that I have found going back that far can be spotty, but by going through the History and Statistical Data page on the website of West Virginia's Office of Miners' Health, Safety, and Training, I can show this chart of annual production of coal and employment in the coal industry going back to 1990. There are some missing years that I'm still trying to hunt down. When we think of West Virginia, we think of the coal mines. But natural resources and mining only actually accounts for 3% of the employment distribution in 2020. I also don't want to spend too much time on this because, as we will see, MVBF has gone beyond just Fairmont, Marion County, or West Virginia. Bringing the original Monongahela Valley Bank in as a subsidiary in 2004 was just the beginning. In 2004, they also established 2 Tier 2 holding companies, MVB Marion and MVB Harrison, to manage the branches of the bank in those counties. Those 2 subsidiaries were merged into MVB Central in 2009. In 2006, they also established MVB East to manage the branches in Jefferson and Burkle counties. In 2007, they established MVB Insurance to handle title insurance to real estate borrowers. Combining title insurance offerings saves their existing customers money and earns the company more profits. In 2012, they acquired Potomac Mortgage Group, significantly increasing the focus on mortgage banking. This was a $19 million purchase, financed partially by the issuance of new shares to accredited investors. This also changed the corporation from a bank holding company into a financial holding company, because they had expanded beyond a single category of financial services. One of the press releases from 2012 caught my attention. Larry Mazza, the president, in this press release, said that he expects the 7,500 banks in the United States to fall to between 3,500 and 4,000 in a few years. I did a search for confirmation of this and found this chart from Statista, showing exactly what he predicted. FDIC commercial banks have dropped from 8,315 in 2000 down to 4,377 in 2020. Even credit unions have seen this kind of consolidation, at least since 2013, which is as far as Statista will show me for free. And even more interesting is this chart, showing how many new FDI-insured banks have come onto the scene nationwide since 2000. The reason for this massive drop was the increase in the details of bank regulations after the 2008 financial crisis. And this was why in January 2011, MVB launched a company dedicated to providing assistance to other banks focused on compliance services. Bank Compliance Solutions was an attempt to capture some market share in the banking industry to help with compliance. But it didn't seem to work out, as it was absorbed back into MVB by the end of 2013. In September of 2019, they tried again, acquiring Chartwell Compliance in Bethesda, Maryland. Chartwell's business focus is fintechs and compliance with all of those thousands of pages of new laws and regulations. In 2013, they made an offer to acquire the assets and liabilities of CFG Community Bank in Lutherville, Maryland, but that fell through after a year of negotiations. In 2014, still on the over-the-counter market, they had a 2-for-1 stock split. In 2016, most of the assets and liabilities of MVB Insurance were sold to USI Insurance Services, while MVB kept the title insurance business for their mortgage customers. In 2017, they formed MVB Community Development Corporation to focus on improving the communities that the bank served. Their focus on the West Virginia and Northern Virginia communities is a core part of their corporate culture, and it's one they can be proud of. MVB Financial was listed on the NASDAQ on December 7, 2017, after 15 years of being on the over-the-counter markets. This was a step towards another goal they had, to be listed on the Russell 2000 Index, which happened on June 22, 2018. The Russell 3000 is the top 3,000 stocks by market cap in the U.S. market. This is again broken up into the Russell 1000, which is the top 1,000 stocks, and the Russell 2000, which covers from 1001 through 3000. Getting listed on the NASDAQ opened the door to institutional investments. And since June of 2017, over 6.5 million shares have been bought by 516 institutions, including Times Square Capital, BlackRock, Wellington, and Vanguard. These are some of the biggest names in the investment world. In April of 2020, First State Bank, which was another regional bank in West Virginia, failed, and the feds handed those customers and accounts to MVBF. We saw this happen quite a bit in the 2008 financial crisis. This was one example of that. In the 2018 annual report, there is a single sentence on page 3. The company is also involved in new innovative strategies to provide independent banking to corporate clients throughout the United States by leveraging recent investments in fintech. This is the only use of the word fintech in the 2018 annual report. In 2019, they used the word 16 times, and in 2020, 36 times. MVB is emerging as a high roller, starting with the U.S. Supreme Court ruling announced in May of 2018 that struck down the federal ban on sports betting, which had been in place since 1992. Nevada had an exemption from the original 1992 law allowing this type of gambling, and New Jersey and 5 other states rolled the dice with legislation waiting or already on the floor in 2018 while they were waiting for the court's roulette wheel to stop spinning. Okay, I'll stop with the metaphors. By November of 2021, 33 states had legalized sports betting, and MVB stayed focused on being the banker of the bookies. Their pivot away from traditional bank brick and mortar was well underway, leaving the southern West Virginia banking market with the sale of 4 branch locations in Cabell, Kanawha, and Putnam counties in West Virginia, and agreements with NYDIG and additional investments into Interchecks Technologies, which is a fintech company that they are integrating more and more into their core business. They're focused on payments. MVB defines fintech as basically anything that moves money and capital via technology over the internet. They are doing their work on the fringes of finance via a subsidiary, MVB Edge Ventures. Under that, there are 3 main initiatives that they have brands for. Victor Technologies, launched by MVB in May of 2021, is focused on financial products built on application programming interfaces, connecting crypto, gaming, payments, and marketplace products and services. Flexia Payments, of which MVB acquired an 80% stake in May of 2021, is a fintech company focused on offering financial products and services in the casino space. And Grand is a financial services company that makes in-game transactions easier by reducing the external game transfers of money between institutions. If all in-game wallets are operating within the same bank, transfers can be nearly instantaneous. ACH and wire transfers between institutions and even between countries can take hours or days. And we are still trying to develop real-time payments processing. MVB acquired majority interest in Trabian Technology in April of 2021. Trabian was founded in 2003 as a technology company dedicated to building digital products, website, and mobile integration for banks, credit unions, and fintech companies. This acquisition boosted the tech for MVB to balance out 20-plus years of fin. Another huge opportunity opened up in October of 2019, when, after a year and a half of development of the service on the bank side, Credit Karma launched efforts to help build the asset side of their customers' balance sheets, complementing their 12-year focus on the debt and credit side. Partnering with MVB Bank allowed them to do that by offering savings accounts with higher than average interest rates. Remember this from just a few videos ago? I can't say enough about just how important it is for everyone to be saving for their future. According to a survey that was done by the website Go Banking Rates in November of 2019, 69% of Americans have less than $1,000 saved. And for 45% of us, that number is actually zero. Or to put it another way, Jangjit Chawla, Credit Karma's general manager for tax and savings, put it a bit more pointedly.
It's kind of a blasphemy that 50% of Americans do not have $400 in savings.
Getting access to Credit Karma's customer base of 100 million users put deposits into MVB Bank on overdrive. And the cost of gathering all those customers was very low. And it was the right thing to do. After a year, more than 2.5 million savings accounts had been opened, and they launched Phase 2, checking accounts that they called Credit Karma Money. And in August of 2021, they launched an integration with QuickBooks Online Payroll, allowing small businesses using QuickBooks to quickly and easily pay their employees directly into the Credit Karma Money accounts. Remember the advantage in the gaming space? Not having to move money between institutions to make payments? This is another example of that efficiency. Here is some data that I pulled from their annual reports. First, here's a chart of their employment numbers going back to 2004. They didn't have data for 2008, 17, or 18, and I sent an inquiry and haven't heard back yet. Next, charts of income and expenses, both interest and non-interest. The growth of deposits from non-interest accounts went from 11% up to 50%, which really helps the bottom line. Comparing the income and expenses, you can see their income spiked in 2019, along with the net income from those deposits into the FinTech and Credit Karma accounts. It's important to note that even though overall income dropped a bit between 2020 and 2021, the net income still went up. One of the core measurements of any bank are the volume of loans that they have on the books. And this chart shows how that has grown, including the addition of home equity as a separate category after bringing Potomac on board. I can't remember what originally brought this stock to my attention. I add new securities and replace poorly performing ones on my ranking list from time to time, and this one appeared and landed high. Let's take a look at what data brought it to the top. In terms of dividend growth, MVBF has spectacular numbers. Seeking Alpha's data goes back to 2008, while Portfolio Visualizer only has data from the point that they joined the NASDAQ. Still, 25.28% compound annual growth rate since January of 2017 isn't too bad. Payout ratio is currently at 20.2%, which is actually higher than many of the other stocks at the top of my rankings, but it still gives them plenty of room to grow. And this is an indication that they are reinvesting back into their business, something that I like to see for future growth potential. Price and total return are also doing well. Something caught someone's attention in February of 2021. Their 8K, filed on February 17th, included a dividend increase, and they reported an 11.9 year-on-year revenue increase. But I'm not sure what else might have put them on the radar, but we can certainly see the resulting spike. MVB Financial has positioned itself well to take advantage of several waves of capital opportunity that have hit over the last few years, from online banking to gaming, merchant services, and payments. They are also working in the background to prepare for the giant tidal wave of disruptive change that is coming for the entire global banking industry. And I'm talking about Bitcoin, cryptocurrencies, and blockchain. They are getting ahead of the game, and it will be a company to watch over the next decade as that wave hits. They have set a dream goal, which they call a moonshot, to financially impact 1 billion people. They're trying to grab a significant market share in the $112 trillion payments industry, the fast-growing gaming industry, the cryptocurrency and blockchain industry, and banking as a service. I've told you my opinions based on my own research. Please let me know what you think down in the comments. Is MVB Financial something that was on your radar? Is it now? Thanks for watching. If you liked this video, please hit the like button and subscribe to the channel. I update my ranking scores a bit every day, and I run the numbers to find the top 10 after each video that I do. So, here's the latest update, and MVBF stayed high at number 9. As you can see, Kinsale Capital Group rose to second place. This is another company in the financial sector, a property and casualty insurance company based in Richmond, Virginia. Time to learn about this company so I can present it in my next review video. I'll be doing that research over the next few weeks. Along with this YouTube channel, please like the Facebook page, and if you'd like to talk about the TGI ranking system and the stocks at the top, please feel free to join the Facebook group. I do these videos for fun, not profit. The profit comes from making good choices in investing and watching the returns roll in. Let's beat the market.